Okay, 3, 2, 1, let's jam.
What is up guys, G here back with another video for you. Today I want to cover Robinhood. We've had a pretty crazy 2 weeks, and despite the volatility in the market, Robinhood has actually done pretty well. Today I want to share some very interesting updates on the crypto wallet. We'll also take a look at the short volume and the most recent institutional activity. And lastly, I'll go through the chart and give you guys my predictions for the upcoming days. As I've expressed before in some of my other videos, I am actually very bullish on Robinhood. Most recently, I explained that in the Q4 earnings video, so check that out if you guys want to know more about Robinhood in the short term. But I do think, in my opinion, they are actually very well positioned going into 2022. They have a great balance sheet and a very promising roadmap, and I think all that will attract a lot of investors. And if worse was to come, they could always be acquired in my opinion, so definitely one of my favorite stocks going into this year. If you guys enjoy videos like this, make sure to take a second and drop a like, and consider subscribing if you guys want to see more videos like this. And with that being said, let's get to it. So first I want to share with you guys this piece from a Robinhood article that I was reading. It was explaining how interest rates going up can actually create an additional revenue stream for Robinhood. So there's actually a secret about how stock brokerages work. In short summary, clients place vast amounts of cash into their brokerage, whether it's from margins, deposits, or even cash that is just sitting in their account. And depending on how the short-term interest rates change, traditionally brokerage can actually make profits from this as well. So any profit that they make from the money or deposits or margin actually belongs to the brokerage and not the client. So that's actually a very interesting point that I never really considered. I was so busy thinking about the crypto wallet and payment for order flow that I didn't really think that they do have assets that they can actually benefit from. So aside from them having over $6 billion in cash, they can probably make some profits off of that cash as well. So as interest rates go up, and we're assuming that the Federal Reserve is planning to do 4 raises this year, then all the cash that they actually have there will generate more cash for them. Now, like I said before, the amount that they can actually make from this will depend on how high the interest rates go up and what the exact amount is that they can earn interest off of. But essentially all that client cash that is inside Robinhood's system and any interest from it belongs to Robinhood. So as interest rates continue to go up, this will actually create a new entire revenue stream for Robinhood. Now, it's not going to be the entire 2% of their entire assets in the trust, which is actually 100 billion, but it will be a substantial sum compared to the current quarterly revenue of over 350 million or so. So I just wanted to share that quick thought with you guys that as the interest rates go up, this could actually transform some of the prospects for Robinhood. And so this does give me another thesis why Robinhood is actually in a very good position going into 2022. Even though, you know, a lot of high growth stocks will be affected by the rate hikes, but I do think this softens the blow for Robinhood. Now moving over to some of the crypto news updates, we did get a tweet update from our COO, Christine Brown, and she's more in charge of the crypto side of the business. She tweeted out on Thursday, "I am thrilled to share that we've officially reached 2 million people on our wait list. The beta program has already rolled out to 1,300 customers as of today, beating our previous estimates." So they're actually moving very fast with the crypto wallet rollouts, and that's in 2 different metrics: adding people to the wait list and actually rolling out the wallet. So I think in the last video I mentioned that they had about 1.5, 1.6 people on their wait list, and since then they've added 2 million users that are eager to get the crypto wallet. Not only that though, but they had plans to roll the customer wallet out to 1,000 people by March. And so with this update, you can see that they far exceeded those estimates. They already have it rolled out to 13,000 customers, so far exceeding their expectations. And this just shows that the beta program and the development cycle is all going very well and very smoothly. She also mentioned in a separate tweet she is listening to all the customers as they are all eager to get their crypto wallet, but Robinhood is doing this very carefully as they have to review the data to be able to manage all the fraud risk and be able to protect the customers as they move them to the blockchain. She also gave an update to the beta customers that they can see some slight delays in the transfers since they are doing additional security reviews, but as they move closer to the full release launch, some of these performance hits will be reduced and eventually they won't be able to see it as it'll be a seamless experience for them. Now that's not to say that they're going to stop the security reviews, they're just going to do a smaller percent of the transactions that will go through the additional checks. And all that makes sense because like they said in their previous update that they are very careful with security and safety. As you know, the crypto wallet in the crypto world ecosystem is all very complex, so protecting the customer definitely should come first. And so for them acknowledging that and working in this area definitely does give some reassurance to the users. So there's a lot of enthusiasm from the customers. As you can see, they've already added 2 million people to the wait list. And they've actually been rolling out the wallet a lot faster than they anticipated, since they already have 13,000 wallets out there and they only expected to have 1,000 by March. And I think, in my opinion, this is going to really help their revenue. Robinhood is going to continue to share updates as they continue to transition from the beta phase going into the full release launch of the crypto wallet and eventually getting the wallet out to everyone on the wait list. So I think this is great news for Robinhood. In my opinion, I think crypto and the blockchain is still in a very early stage. I think there's going to be a tailwind in the next coming years. And so Robinhood getting this crypto wallet out is going to create an additional revenue stream for them. So I understand how much it means to Robinhood to be able to get this crypto wallet out to all the customers. So the crypto news is great, guys. It's very bullish in my opinion. But now I want to move over to the short interest rate. As you can see, short interest has grown by 23%. Robinhood was the recipient of a very large increase in short interest rate in just the last month. As of January 15th, there was a total of almost 39 million shares sold short. So that's an increase of over 23% since last December, when they only had about 31.5 million shares sold short. As of Friday, Robinhood opened around $15.18. Our 52-week range is from $9.94 up to $85. And I will go more in depth on the charts later in the video. But the crazy part, in my opinion, is that since January, the shorts have increased. The crazy thing is the stock price is still trading around the same level as last month. So as much as the shorts are shorting, they are not doing a very good job. In my opinion, when you short a stock with a great growth business model that is near the 52-week low, to me that just shows greed from the shorts. And honestly, not a very smart move, but who am I to tell them what to do? Now, in my opinion, one of the reasons that they have been shorting Robinhood is because of their earning results. And I did go more in depth on their earnings and their roadmap for this year. So definitely check out that other video if you guys want to know more about that. But essentially, Robinhood reported earnings of negative 49 cents per share, which missed the estimates of 34 cents. So I think that some of the shorts did pile up some of their short positions, since Robinhood did miss earnings on an already lowered guidance. But honestly, I don't think the earnings were that bad. They did bring in 362 million in revenue versus the estimate of 366. Plus, I think most of this stuff was priced in. And like I said, you really don't want to short something if they do have great potential in the long term, especially since they are near the 52-week low. Another reason that the shorts could have increased their short position is because a few research firms did adjust their price targets on Robinhood. Some of the price adjustments were from $25 to $15, $17 to $13, $42 to $12, and so on. They also reduced their buy rating to equal weight and underperform, but there was one outlier, and that was JMP Securities, and they set their buy rating to market outperform, so that was definitely weird. Overall, you had 2 investment analysts with a sell rating, 7 with a hold, and then 6 with a buy rating. So according to the marketbeat.com, the stock has an average rating of hold and an average price target of about $25.49. So from $15, there still is a pretty good upside up to $25. Moving over to the short volume ratio, you can see that we've had an average of around 45% of the volume shorted, but if you take a look at the most recent trading days, there does appear to be a downtrend. As you can see, we went down from 49 to 46 to 43, and then most recently Friday, we had only 40% of the volume shorted. So there is a decrease in the short volume ratio, but I can better illustrate the whole concept with this chart here. Looking at the chart, these bars indicate the amount of shares available to short. This black line here reflects the stock price, and then this red one indicates the short interest rate. So if you take a look back in December, we had tons of shares available, and the shorts used these shares to short the stock that reflected on the stock price here. But like I was saying earlier, now we are back to these levels here, but now we don't have available shares to short. So as the stock price goes up, we are going to get back to these levels where shorts open their positions, and that's going to create some buying pressure, as some of the shorts that open their positions will be tempted to close them, especially even some of the shorts that open their positions down here. So in conclusion, we don't have that many shares available to short, and as more buyers start to step in and start buying the stock, that is going to increase the stock price, and in conclusion, that's going to increase the short interest rate, which shorts are paying to short the stock. And so at some point, in my opinion, there's going to be an inflection point where tons of these shorts are pressured into covering their positions, and that's going to shoot the stock price up. So that is some of the short interest data update that I have for you guys. Now let's take a look at some of the institutional activity, because there has been some new positions open, as well as other institutions continuing to add to their positions. So I highlighted some of the bigger transactions, and that is dating back to January 31st. So definitely after the earnings date, and you can see there's tons of new positions opened. There's one for 115,000, there's one for 150,000, and then there's one for 69,000 just in those 2 days. There's also Renaissance Capital with an open position, and they actually added 1,000 shares on February 1st. Other new positions include 172,000 shares, 52,000 shares, and then you have existing open positions of almost 15 million shares from Sumitomo, and that added a little over 200 shares on the second. But there's also a few positions that were closed, but most of these are around 100 shares, so very small. And then lastly, on Friday, you can see even more positions were open. You got a few positions of 40,000, 49,000, and even a smaller position of 10,000. And then again, you have those small positions being closed of around 100 shares, so really of no importance. So in conclusion, ton of institutional stepping in and opening positions. As of now, institutional ownership is around 45%. That is a little under 400,000 shares. The whole institutional value equals about $15 billion in cash. So almost half of the entire company is owned by institutions, and that wouldn't be very good for the shorts if retail and institutionals continue to add to their positions. So I'll wrap up the video by doing some technical analysis on Robinhood's chart. On Friday, we were up over 7%, trading around $15.18. Our volume for the day was 23 million with an average volume of 33 million. Our volume has came down a little bit, but overall from the past month it is increasing, so that is definitely good in order to continue the momentum. If you take a look at the chart, I did adjust this channel to adjust it more to these intersection points, but even then we did break out the channel, so that is very good. Like I mentioned in one of the previous videos, I think I mentioned this was going to be a very strong resistance, so it did take us a few tries to get through it, and so now we closed above it and we're actually outside this channel as well, so that is great to see. We definitely need to stay above $15 to continue this momentum. Our next level that I do have marked up is going to be around $16.65. But the most important level to watch is going to come at the monthly level here. That is around $18. And that is because we've had some sideways action here for some time. So that is going to be a major resistance when we get to this level. Moving over to the daily time frame, this gives us a better idea of the overall picture. Like I said earlier, we do need to stay above $15. This is an area we traded a few times, so definitely a good resistance. So closing above this on Friday was actually pretty bullish. Now we just need to maintain this level. And then zooming out just a little bit, you can see that back in October, November, and December, we had an average volume of around 15 million shares. So our volume is going up, and with our price stall going up, some of this short pressure is definitely going to have to get covered. And then lastly, you can see that the RSI did break above the moving average, and it's in an upward trend. So we do have some upside still until we get to overbought territory. So that looks like it will correlate back to around $18, which makes sense since, like I said, we have a very strong resistance here. I think when we get to this, we probably will retrace a bit, and then we can further evaluate that and see if we can continue the momentum upwards. But from the overall picture, if we do break around $18, there is not much resistance going back up to about $35. There's a few resistance areas, but nothing like the $18 level. So this is going to be your biggest level to watch. So in the short term, just make sure to stay above $15 and also watch the $18 level, as well as watch the indexes, because that will dictate how this performs. So guys, that is going to wrap up today's video. There's definitely a lot of short interest in Robinhood, but as the stock continues to climb up, that is definitely going to bring some pressure to the shorts. Plus, they are announcing great crypto news updates, and also consider that the federal interest rates can actually create an additional revenue stream for Robinhood. So long term, I'm getting more and more bullish for Robinhood, but you guys let me know your thoughts in the comments below. I hope you guys found value in today's video, and if you did, make sure to smash the like button, subscribe to the channel for more videos like this. You guys have a great day, and as always, keep moving forward.